Has the Omaha market started to show some signs of cooling? Yes. Markets are always changing. Now, the market we've been in for the past couple of years has been unsustainable. Are more homes on the market? And the answer is yes. And are some of those homes on the market a little bit longer? And the answer is yes. Does that mean we're heading for a crash? And the answer is no. In today's video, we're going to go over 7 reasons why the Omaha real estate market is not going to crash. And we're going to get started right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now let's jump into today's topic. Reason number 1 is low inventory. Right now, as of today's date in Douglas and Sarpy County, we currently have 815 active homes for sale. And every month, typically we sell around 1,000 homes per month. Therefore, we have less than 1 month's supply of inventory on the market. So in terms of supply and demand, that's still a seller's market. Do we have more inventory than we had before? And the answer is yes. Now, that's good because buyers will have more choices and they may not have to resort to some of the tactics they've had to use in the past in terms of multiple offer situations. So an increase in inventory is good for the buyers. Reason number 2 is jobs. Now, in terms of jobs in the Omaha area, Douglas County has a 2.6% unemployment rate and Sarpy County has a 2.2% unemployment rate. Low unemployment adds buyers to the marketplace. Now, if jobs are lost, then that's a different story. So we got to keep an eye on jobs in terms of watching the real estate market. Reason number 3 is new industry and job growth. Now, Omaha has seen an influx of job growth. For example, Google is building a data center right now in Northwest Omaha. So we've seen an influx of companies coming into our area. It adds jobs and it brings buyers to our marketplace. So right now we're seeing a building boom in our area. Reason number 4 is new construction. What about new construction? Can't builders just ramp up production and build more homes faster? Now, there's 2 challenges to this. Number 1 is a labor shortage. And then number 2, we're still having some supply chain issues. Lately, we have seen lumber come down in price, which may show some decreasing demand. And here's another sign, and I've mentioned this in other videos too, and that is in the past 2 years, we've had DR Horton, the nation's #1 builder, come into our marketplace. Now, if you'd like to learn more about DR Horton, I'll include a link in the card above. If they did not see potential in our market, they wouldn't have moved here. In fact, they're actually expanding and building more homes in our market. Some builders right now have waiting lists. Some builders have taken their homes off the MLS in order to kind of catch up. Some builders limit the amount of contracts that their reps can write each month. So we're not having this overblown inventory being built. More buyers are moving to Omaha. We have seen more buyers from out of state move into our market. Now, people can work remotely. People want a great place to raise their family and they want great schools. Omaha fits that bill. Personally, in 19 years of selling real estate, I've never worked with more out of state buyers than in the past 2 years. So more folks are recognizing and seeing what Omaha has to offer. Now, if you're from out of state and you need an agent in our area, hey, my contact information is in the description below. Okay, reason number 6 is going to be interest rates. If the market does correct, many people are not going to be inspired to sell unless they absolutely have to sell. If you own a home and it goes down 10% in value, you're not selling just because it went down in value 10%. Okay, and then keep this in mind, roughly 86% of the mortgage holders out there have an interest rate right now below 4.75%. These homeowners are only going to sell if a major life event occurs. That means in order to create more inventory, we have to build our way out of the inventory shortage that we're in. Now, let's look at interest rates for a moment. Let's say you bought a house last year and you paid $300,000 at a 3% interest rate. Okay, for this example, we're just going to say you're financing the entire amount, and we're just going to look at principal and interest. Your principal and interest payment will be $1,264.81. Now, let's say the market crashes and that $300,000 house is now worth $200,000, okay, because it lost a third of its value. However, the interest rate is now 6% versus 3%. Okay, that buyer who decided to wait and till the prices come down is now paying, in terms of principal and interest, $1,199 a month. Okay, so waiting, when you look at financing wise, only saved them about $65 a month. Did it really make sense to wait? Now, what if you're wrong? What if prices just level off? What if that $300,000 home did not go down in value for $200,000? Let's just say it stayed the same at $300,000. Well, your monthly principal and interest payment with a 6% interest rate is now $1,798.65. Okay, reason number 7, we talked about this a little bit before, but we have a very stable economy. Omaha has a very stable and diverse economy. People are starting to see that Omaha has a lot more to offer than what they may perceive. If the market does correct, what it may actually mean that home prices may not increase at the rate at which they've increased in the past. And then here's the other thing too. Omaha or Nebraska is known as one of the best states to survive a recession. Now, markets change. If the market does slow down, that's actually a good thing. And that's what they want to do, because they want to tap the brakes on inflation and slow down demand. And they do that by raising interest rates. Now, those buyers that have struggled to get their offer accepted in the past several years now may have an opportunity to get back into the market. Now, sellers are going to have to adjust their expectation because, an offer may not sell in 4 hours with 15 offers. Okay, the government and the Fed, again, are trying to slow things down to stop runaway inflation right now. But if you're a home buyer and the home is in your budget and you have a stable job and you can afford the home and you have a little bit of money set aside, then you should go ahead and move forward. But again, it's your decision. And you make it a great day. Hey, and don't forget, show some love for the channel. Be sure to subscribe and check out this video next.